Yesterday I put out a video that odds are that we are about to see a melt up in the SPY, and this here is the S&P future, and we get more evidence today that most likely we'll break to the upside. Today we heard like one of the Fed idiots here, Patrick Harker, who's not even a voting member. I don't even know why he is speaking. He doesn't matter, right? And he was way more hawkish than what the market wanted to hear. We sold off hard after his comments, but the market is snapping back, and there is some gravitation towards that 2940-ish level. And I am certain between 2940 and 2960 there are so many stops of people who think they're getting a bargain here to short. I think they will get run over. And the question is just, will they get run over and then ultimately proven right, and the market then goes in their direction with them chasing, or is it going to be a melt up that then challenges new highs? And which of the two will probably depend on how Powell speaks tomorrow morning, and I doubt that he will really F it up. I believe he understands by now that every word matters, and he usually only blunders when he talks off his when he disregards his remarks, when he talks off the cuff in the press conference, because when he has a prepared statement, he is very, very careful not to piss off the market. So I think he will figure that out tomorrow, and these stops here, they will be taken out. At least I believe the odds are very, very high that these stops here will be taken out. The question is just, do we reverse after that and then go lower, or do we go straight up? That I don't know, but I believe to short here is a very stupid idea. That's what I believe. And when we take a look at gold, we see that it is hanging in here, which is pretty good. I'm a little bit surprised actually that it's holding up so well. Miners are weak today, and I wouldn't be surprised if gold were to follow, simply because it is so crowded. If you look at the positioning in gold futures, there's like 7.5 times as many bulls as bear in there, and usually then we need shakeouts for before the market can go higher, and we have not seen a shakeout here as of late. I mean, there was one here, but I believe we need another one, and we need a bigger one. We probably have to go below 1480-ish. If that were to happen, then I'm a happy camper buying a dip in GDXJ. Then obviously I would go for a JNUC, the triple ETF, but I want to see some pain on the long side first before I pull the trigger. I believe right now it would be too easy to buy into gold, and easy usually doesn't work, especially when it comes to gold. Let's take a look at the miners here real quick. This is GDXJ, the junior gold mining index. So I want to see at least pain here to that 38 level. I would love to see a dip below 37, and really awesome would be something to challenge that 36 level. Then I think this is the best risk reward we could ever ask for. We have to then buy JNUC. The thesis is totally wrong. If we were to drop to 36 or drop below 36 and actually stay there for a couple of days, that would be terrible. I doubt it will happen. But if we get close to 36, gotta buy this dip. I believe the risk reward is excellent because this was the level that we broke out from. There should be buyers there. If not, it would mean that the market is totally wrong with expecting more rate cuts, and it would pretty much mean we have something ahead of us that looks similar to the second half of 2016, because we had this fear there of slowing growth, and the economy bottomed in the second quarter of 2016 and then rallied, the economy that is, and then stocks as well, rallied into the election and after the election. So if we lose 36 and stay there, we will probably see a melt up in everything but gold, because that means the economy is accelerating again. But this is not the the scenario right now. Right now, I'm looking for a shakeout in gold that we can buy. Maybe J. Powell will help us tomorrow, but I think we need to see it before we can actually make a move higher in the precious metal. Before we wrap it up, let's take a quick look again here at the S&P 500 future. And I want you to keep this in mind here. This 2940 level, it is so Captain Obvious to everybody that it is almost impossible for it to hold. The market doesn't work that way. It finds a way to inflict the most pain. So that we breach this 2940 level, I believe, is pretty likely, and that is still 17 handles from here. So there is still upside before we even could see a potential fake out and then reversal lower, depending on what J. Powell has to say. But expect that break, and if you are bearish, wait for this stop hunt here first, because the odds that this Captain Obvious trade here works is very, very slim. And if you want to keep it to drawing stuff on your chart, what this essentially is, and most of those chart patterns I think are BS, but there is a couple that actually do make sense because they reflect I mean, they all reflect some sort of behavior of market participants, but oh, I can't believe I just said market participants, like these fat people. I listen too much to these idiots. So what I'm trying to say is this is kind of like a multiple cup and handle scenario, right? We see a big dip, then we see a next dip that is shallower. Then we see another one, there's a big dip, and the next dip is shallower. All what that means is it gravitates towards something to the upside. So it's inverse gravity. And that is why I like this cup and handle kind of thing, because it tells you the dips are being bought. And that is why cup and handles actually do make sense. So I believe there is gravitation here towards this 20. You get my point. Be careful shorting. That's all what I'm saying. I believe that's enough for today. I hope you found this helpful.